Welcome to today's feature presentation, where we will share how to uncover hidden profits with trade repairs. What's a trade repair? Instead of taking the stop loss, you repair or adjust the trade. That also gave us our name. Never stop loss trading was a bit lengthy, so therefore we shortened it. So let's go into the details. Let me share the principles of our charts and indicators. We color uprising price moves or momentums in blue, down in red, and when red and blue mix, it's purple. So when there is a purple zone, the market has no good direction and certain trades are not applicable. We use upper and lower studies to indicate crucial price turning points, where the real crucial turning points are put here on the chart. So you saw left to right, there were clear sell signals. There was a buy signal, and just most recently, mid-end May, we had another buy signal here on that weekly never loss trading top line chart, letting us go long and coming to the target. Yeah, so there's always a target on the chart. So you see these dots, they specify where the target of a price move is. The orange signal does not have a target, but the target goes to the next dashed line. Yeah, and also will lay out an idea of how long shall it take to target. The first target is usually 1 to 5 bars, the second 1 to 10 bars. Here we also need 10 bars to come to that happening. And so this is how we can always specify at entry what we want to do. There's a price threshold, a buy or sell price threshold. There's a target defined by the system, and also the stops defined. Here, let me put it together so you have a reason why to act on a high probability price turning point. You have a condition to buy above $100.05. Only if the price gets there, your buy stop order gets triggered. The same on a sell stop order. And now is what we're going to share today. We'll do a trade adjustment where the stop level is, and with that increase the profitability of trades overall, even being able to turn losers into winners. The volume study also shows colored bars, and we look in particular for purple, red and blue, and because there it's like a piano, the tune starts hitting and the price move starts coming to a beginning or to an end. Yeah, so that's how you can read also with the combination of our price volume study where are good points. But one thing will be for certain, and not many traders have it, you'll know in zones like the purple zone here when there is price ambiguity, and you better work with a good trade repair to not constantly get stopped out and taken out of the market, because when a purple zone is happening, statistical volatility goes up and challenges the borders of the trades. The bottom study we call the never loss trading balance of power, and it shows you in blue bars buyers in charge, in red bars sellers are in charge, and it helps you to find those handover points. And you see here, most recently we came out of the purple zone, had a buy threshold. You see here this chart for SPY, the ETF of the S&P 500 contract. So it had a buy signal, buy above 420.72 cents. That happened in the price move of the next candle and led to a nice trade to the upside. This is here a weekly chart, a little bit longer term development, but we'll go to daily charts too. Yeah, and so you saw here, okay, buyers came back into charge, sellers never took over. We have a long environment, and that's what you want to do. You want to prefer long trades. When longer term price moves were not favored by the system, here printing a purple zone, what do? Swing trading. And swing trading always works. You just have to know how, and in particular trade repairs. They come very well in swing trades. Yeah, there you trade from a daily chart, which is the most favored chart for swing trading. Now I'll give you plenty of examples. When the market is not trending, statistical volatility can challenge trades. Yeah, there's always something to trade. Short-term price moves are present, but on the other hand, by the volatility that might challenge your stops. But if you have a method of trade repair, and that's what I'm going to refer to today, to repair the trade instead of taking the stop loss, then you have an edge and you can survive even in times where things swing up and down. You participate, you protect yourself, and you bring a lot of those trades that would have been losers to make them winners, or at least reduce the amount of losses. Let me introduce myself. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk in trading. And as said, never loss trading is not a promise that you never lose a trade. It is a concept of trade repairs and looking for high probability price turning points. So with that said, there's a couple of more things in that risk disclaimer you can read, but we want to go into the details and share value with you. In swing trading to the up and downside, we take both directions from any type of account. You want to act at crucial price turning points. But what's essential is that the system dimensions how far a price move shall reach and where to take the exit. On the stop, you'll need to know the method of trade adjustment, because instead of taking the stop, we want to adjust the trade, repair it, and wait it out, either reduce the amount of losses to less than half or even turning losers into winners. And that all is possible to the up and to the downside. A little bit of theory behind our model. Yeah, so when there is demand, for example, we go to the upside first. Institutions go and buy into an asset. That increases the price because more demand than supply, prices increase. That gets noticed by others and by us, by our indicators, and from there we extrapolate how much further out the price move shall best go to take profits. It might go further, but that doesn't matter for us. We want to trade for the main price move and then exit the trade to the upside or to the downside. And our system picks up those crucial turning points when a price comes out of a certain containment area and is freely moving to the upside or to the downside. To specify the most probable end of a price move, we develop what we call the SPU, speed unit. With the speed unit we dimension, for example, okay, on that $100 stock, there is a $2 price move potential that gives you 2% return on cash, and then you best take your profit. Very simple, very easy. When a certain price threshold or entry level is surpassed, you say, for example, $100.05. When that's surpassed the price move of the next candle or day, then we'll go for a $2 price move from there and take an exit. Simple, easy, and you know at entry where to exit. At any candle of the chart, the SPU is defined as the speed unit, how far a price move shall reach, and it's put on a chart for you to act upon it to the upside, to the downside, and with that you never ever leave it up to your own interpretation where to take an exit. The system will help you with the SPU definition. Our trade repair method, which we teach in our individual coaching sessions, is a unique approach where, for example, on trading stocks you don't need additional capital to repair your trade, while on trades with options, futures or forex, additional capital or margin will be needed. Let us calculate what the impact of a trade repair can give you. When we act at high probability setups, where you forecast with a 70% accuracy the price move, dimension it as follows: you make a dollar win and you risk $1.20 at a 70% probability. If you'll do 10 trades, for example, your expectation value is $3.40. It's positive, that's nice, super good. So now if you reduce with the trade repair method and you'll make only 50% of the loss on 30% of the trades that don't come home, you will increase by 153% over this one your profitability. If you get out to break even, you double, it's 206% over this one. And if you bring them to full profit, which also helps, then you are about 3 times of what the original expectation value is. And that's a big difference if you want to make money long term, in particular in your IRA or whatever type of retirement accounts, but also on your short-term swing trading accounts. Most of our trades here with the swing trading concept last between 1 and 5 days. There's very few day trades with it. Let us come to a first example here, where we are in a statistical volatility, in particular in that purple zone that I showed you here. May 26, Baidu showed an Evolus trading power tower signal which said buy above 126.40, and the stop was right underneath that candle. So 2 days after would have been stopped. But with the method of trade repair, we were able to repair that trade. So how did it go? So here the trade was initiated. The moment it was stopped, we adjusted the trade and we even got premium in the house. And then when we broke out of that cyan zone, which is a key crucial price containment area, we relieved the stop and brought the trade to target. Yeah, so there is a method and methodology that you can easily follow and learn. Okay, you enter at the price threshold, 126.40 is passed. If the trade comes to a stop, you adjust the trade, and we'll share with you what you need to do to make that. And then you relieve it when the trade turns the other way around, comes out of the science zone price containment area, and then you carried it out and got it home. So how many days did it take? 1, 2, 3, 4 trading days, and the trade came to conclusion, and for 1 day a repair. Here's another trade repair. Yeah, so on 5/18 Apple had a buy signal, buy above 175.24, that came and got concluded in the price movement of the next day, and then price reverted. Yeah, when we came to that little stop line here, we repaired the trade, so added options to it. Yeah, and we got premium. Then when the trade moved the other way around, came out of the containment area, we carried it out to the upside. Yeah, so here was the target. So 1, 2, 3, 4, 5, 6, 7, 8 trading days, or 9 to come home. Yeah, so that's what's required. The system specified to the second target here, it'll take about 10 days, and actually that took about that long. But also to the first target, it was about 1 to 5 days. But eating the trade repair method, we were able to adjust the trade, not taking the stop loss, relieve the cover, and then carried the trade out. However, most of our trades do not need a repair because we are acting at high probability price turning points. Here's an example for Berkshire Hathaway. Yes, so you saw here the trade to the downside, came to its target, and then we closed it. Then it started to revert, giving us an upside signal, and here a target 2. At the moment I recorded the chart, the trade was not at target 2, but however, let's go and dive into the real life chart. Yeah, so you saw here target 2 was reached here at 6:14 and concluded the trade. We put all the details to this in an article where you can reread what we were just demonstrating here. We want to keep the video brief and not boring with a lot of little details, but when you want to go through it, you'll find it in the article. If you cannot find the article online, just write us an email, contact@levellosstrading.com. And we'll send you that article. Just write article trade repair, and we give you the details that you can reread it. I just give you an example too of what can happen. We had a client that came to us with the following: September 15, 23 had sold calls and puts, so he created a strangle, and he collected a nice, give or take, $14.85 of a premium. Yeah, so that's good. However, that's how his profile looked like, and our indications on the chart told we are going long rather than short, or rather than staying in that containment area with Amazon. So therefore we helped him to adjust the trade into a more meaningful manner, following the principle, if a high probability indicator says long, so why don't you go with it? Here we had to add capital, yeah, coming from that plateau here, which made the profit. So he was looking at a $3,000 profit if the price was between $110 and $120. But you know, by today we are $126, $127, so he would be in a loss, and that's what we try to help the client to prevent. And with that, we adjusted the trade by rolling forward the individual positions and adding stock. So they need a little more capital, but it'll be fruitful, you see in a moment. So now that's how the newly set up risk profile looks like. So that means if the price stays above 120, he'll be in profit. Yeah, if the price drops below 110, then he would make a loss, but we would readjust the trade again. And so he is looking at acquiring an $8,000 profit for that original position. He started out with an expectation of 3,000. He's now at 8,000, and he had to add only relatively little capital to it. Yeah, knowledge is power, and I show in that article how we helped him to transfer the one to the other and what the impact was. Yeah, originally he had about $17,000 of margin engaged. Within adding stock, it was $27,000, but look at it, 3,000 expectation with 17,000 invested, or 8,000 expectation with 27,000 invested. That's a 30% return on capital. And that's what a lot of people are looking forward to have, and now relatively secure in the area where Amazon is going year end. And if it wouldn't hold up, we would readjust the trade. That's the never loss trading trade adjustment method. So therefore we say knowledge is power. How to find stocks with a crucial price turning point. You have two ways when you run never loss trading top line. You have the ability to run your own market scanners, or you can subscribe to our never loss trading alert service, where we daily announce which stocks have a price turning point and are valuable to be followed through. Yes, so you can write us an email to contact@neverlosstrading.com, subject swing alert, and we'll be sending you the alert for a week for free, and you can check it out yourself and then take reference with us. Trading is more than just following an indicator. When you compare trading to golf, you'll see there's grip, there's stance, there's swing, there's drive, there's chipping and putting. And there's a lot more details, and those who play, they know how difficult it is, even so the mind does it right, swings through and bring that ball where it's supposed to land. The same with trading, but the arena is a little different. Yeah, so here I just put together 12 key things to focus on. And if one of them is wrong, your trading might not get to target. Here, that's like when the ball lands somewhere in the rough, and it's not where you intended it to come through. And in our mentorships, we'll go through all that so that you learn to have all the key and crucial elements ready for your trading as a swing trader, a day trader, or a long-term investor. We are more than 10 years in business. Actually, the company was formed in 2008, and we help many traders to get independent and make a living from trading. All our teachings are one-on-one, taking care of your individual wants and needs and your best available time. Ask us for our summer special 23. Yeah, because for swing trading, we offer the price breakout study, which is very, very essential. You'll get it as a freebie on top of a subscription to one of our programs. So that's a big gift, $3,000 right into your pocket. But the key is not what you save. The key is what you can make out of it by acting at crucial price turning points and price breakout points. Take the chance for a free consultation hour with us, where we look at live charts and what we can do for you. Contact at neverlosstrading.com demo or call the office 866-455-4520. We are looking forward to talking and working with you. Good trading. Bye-bye.